All right, good morning. Today is September the 1st, 2023, the very first day of September. And it's a Friday, the last trading day of this week. And you can see that the data released at 8:30, employment data, I think it's non-farm payroll. And you see the spike right there. Want to see if this a trap or is a legitimate move up, right? We look at the candle, we see right here 8:30 the non-farm payroll report. So it create more jobs than it, but I don't know why the employment rate is increased. We'll look into it later for now, but now let's look at the market right here. So we see that it pull up and let's see how the price play out right now. I think it looked like it come down. You see the rejection right there, you see the auto block, follow up and retest auto block right there. Yep, and you see the buy side that he was taken. And you see on a 4-hour time frame, you can see that it's hit the supply level on a 4-hour time frame. You see the Fibonacci gap retest. You see the sell side liquidity were trapped right here. Right, if retest one more time, I think I will go in. You know why? Because it's close to my stop loss. I will stop loss right there. Okay, I will go in a short. Okay, no doubt, keep going. Okay, I'm short right now. Let's see how far we go. We're short at 30. So the setup for us is what? 32. What the setup? Very basic. We already talked about order block. It's all day long, right? Retest, and it's a short setup. We check our channel here. We get close to our stop loss. And what condition we have? We have the buy side liquidity was taken right here, right? Buy side liquidity. Buy side liquidity were rated or taken, and then you have sell side liquidity drop right there, and the entry time is around 9:30, right? 08 32, and our stop loss is perfect, just so above the driver swing high right at 453.66 right there. Yeah, I take it. You see the order block right there, follow up and retest. When we see the setup, just take it, no hesitation at all. I mean, it's a very low risk right there, and our targets at least this level, right? And then we go from there. Wow, see that? That's beautiful trade. Man, we have that setup yesterday. Yesterday we didn't have a good trade there. It kept choppy, and we got shake out when we go short. But if we have to wait until 10:30 something, then we have a beautiful sword. We don't have a sword right at the open, really. But now we have it. Oh man, look at this. Wow. So 5 cents above there. Oh man, we're still in the trade. You see that? Oh man. What the hell is this one? 66, 5 cents. 5 cents will be 7. So 66 just 1 cent above with 5 cents. So we are good. Man, look at that. You see, amazing. Oh man. Can you believe that? That's become our instant now. Excuse me. You see, that's become our second nature, right? Tech practice make perfect, or repetition. As soon as we see the setup, we took it. No hesitation at all, because it's a very low risk. You see, very low risk right there. Extremely low risk. Look at that. How much we risk? I mean, we go in here. But let's say we go in at this candle and very conservative, we roll in right here. Our order, look at that, how much we reach. Why? What happened right here? I cannot get this one working. What's going on, my friend? Wow, look at that, my friend. Okay, let's say we're going at right here, right? 33 actually. And look at this, how much we reach. 5 cents above, we reach about 40. Right, 66, 71 right there. So we reach about 42 cents, and look how much we gain so far here. How much we gain? I think it's like 1 to 2 risk reward ratio right there. Yeah, man, that's easy money right there. That's what we're talking about. Easy trade, easy money. So it's about 1, 2, 3 exactly when we're 40 cents and $1.23. Yeah, for how long? Come on, how long? Less than a couple of minutes. You go in at this candle, 34, and then 4 minutes, you get it. You got $1. Wow, man. That's what we're talking about. Easy trade and easy money. Remember, market provide us endless opportunity of good trade, easy trade, and easy money. What I'm trying to do. Okay. Let me make it show up, and we take a screenshot. So we document this trade. We take a practice trade. You remember we trade only on Thursday or Friday, but yesterday we already take one real trade and it not succeed, but we have a ton of lesson. Wow, look at that. Wow, look at that, my friend. Wow, 38. $1. Target, if our target $1 move, right? Or $1 move. Hit it. It reached that target at actually at 9:38. Yep. So we reach 42 cents and reach $1.23. So it's 1 to 3 risk reward ratio right there, and only in 5 minutes, my friend. Yeah, so in the first 5 minutes, there I short setup, then going. First 5 minutes, just remember that. First 5 minutes, that short setup, you going. First 5 minutes, yeah. Put that in our note. So basically we're going, when it go up here, and it take one more wick, you see right there, take 1 cent above that. Can you believe it? 1 cent above the 34, and boom, we already see the setup right there, right? Buy side liquidity were taken and sell side they were trapped, and boom, go down, take all that. Yes, the conservative is right here. It take this buy side liquidity right there. So this target, what the low of this one? 71. So the target here at what you can get out right here, we have 41 right there. And let's see if we know that if we hit that target, right? That's sell side liquidity right there. And let's see if we extend that to this target. $1.55. Man, you see, it's like 1 to 6 risk reward ratio, almost 1 to 6. You see that? Man. $1.54. So targets social liquidity at 451.71. Hit at what time it hit? This target sell side. What kind of 41? Let's take this screenshot. Target social liquidity at 451.71. Hit at 0941 right there. Beautiful right there. So remember, we go in at red candle, right? 33 and 41. Oh man, 8 minutes. You get $1. Wow, and it keep going down right there. Wow, look at that. Yeah, I think look at the high time frame, like 4 hours, it's perfect for the short. And you know that for when look at the September is the month that you see right here, September. You have August right there, right? You see, you can treat this as order block, right? It move away. Let's see, and you see right here. We are looking at a monthly table. No, I mean monthly chart right there. Okay. You see the order block. You see the huge fellow gap right here, and this is the retest of this order block. So the bearish is still bearish. Setup still bearish, even though you have a long setup to play out, and I think the long base already reached its top. It peaked right there, and now the short setup gonna play in. And for the September, we have 48% is up. So in terms of the September, we have less than 50% for it to go up, only 48%. So it got 50% right there. And this data is for 30 years. So basically the property for September is either way, it can go up or go down. We got 48%, very close to 50-50 right there. But look at this, liquidity run up right here, and it's, it fall into, it retest the outer block and close the value gap. So look like direction is gonna come down. But this is the month, the Friday. I don't think it's gonna come down real hard, but let's see. Okay, so here's our some observation right here. We take the practice trade right there, right? So we saw that the observation we saw is the short separation between first 5 minutes. And another setup, another thing we want to see is that the entry location is just above the entry location or the retest. Okay, just above what? Above 9:30 open at 09:99 and open at 9:30. So that's observation. We have two observations right there. Okay, very valuable. Or the condition, basically is the condition we want to see. You see, it's just above the retest, right? Error. Wow, look at that, 5 cents. I'm telling you, just 5 cents. $0.42 and you get $1. Man, I mean, if we look right here, we see that right here, but if we look on 5 minutes, we may have to have a better target. Right, look at 5 minutes. Yes. Wow, look at this candle right here. Look at all this candle. Yeah. So yes, $1.54 should be good enough for us. But if you look at on the 5 minute, your target can be a little bit lower. You see the huge gap right here, right? And you see this candle, this bullish order block, boom, it go up. That can be a retest, the target for the short separator, and you can see that. Okay, I promise you I showed a 4-hour time frame. Let me look at the 4-hour time frame. What that one, and then alright, let's remove this for now, because if we not look, it will block our view on the 4-hour time frame. So we are simply okay, here's our 4-hour time frame, and let me turn off all the purple right there, that we have a see better how the really work run. Right, okay, here's our 4-hour time frame right there. I mean, yeah, 4-hour time frame. You see this is the order block. You see, it just goes straight above that. Take the buy sell liquidity, and then you see in the pre-market it take the buy sell liquidity. You see, whenever you see the buy sell liquidity were rated, then it's a perfect for short setup, especially it on top of it, right? It at the top. So whenever you see the liquidity buy sell liquidity was set up, and the huge move up right here, it's perfect for short, going on short. Take it. It's easy trade, very low risk right there. Market provide you. That's what I mean right there. When they see that, boom. Okay, that's the 4-hour time frame. And look at the weekly. I already showed you the monthly, right? The monthly, the short, the long already hit, you know, it peak, it reach hit, you know, it reach a pitch or it top. Now I think the short setup gonna start playing now. Now I think. But look at the weekly. Okay, right here the weekly. Okay, I want to point out something for the weekly. You see, you make okay, high low, high low, high low, and boom, big one make a low low. So right here you see that this market structure is cheap, or it's just a retracement before it continue to go up. That's the question, million question right there, worth $1 million question right there. Well, in order for this, I would love to see another leg down, and then it pull back, and then boom, all the way down. So let's see how I know. But you see that the short setup is still valid right there, order block. You see the followed up, and now it's just retest the up block. So we can look, as soon as we saw that, we can short right away in a small time frame, because there's some there will be always the retracement on small time frame before it either decides to break this, or it's going to be turn into a completely reversal. The retracement is always there, and whether retracement into a reversal or not, that the next thing we gotta find out. Right, so this retracement is always happen. So in a small time frame, our job is capture that move, that's it, and get out. It can be just a small retracement, and then it continues to go up. But our job that we know that this is the easy trade right here I'm talking about. Easy trade, easy money. Can you believe that? Right here, 33, you go in at 33, and you get out at 49. Just less, more than 10 minutes, 15 minutes, 60 minutes. You make almost $2, right? We go in, remember we're going in here. So we go in here. Look at that. Yeah, $2. I make $2. This $2 can turn into 200, 2,000. You scale up. The number is unlimited. 20,000. Excuse me. 200,000, 2 million, 20 million. That's the scale. When we got this skill, then the sky is the limit. We can scale up. We can scale up. Excuse me. So we are in the first 30 minutes of trading for today, Friday, and we get a really, good trade. It's very clear. It's a low resistance liquidity run. Remember, whenever you have a impact news, the first move, the spike or the drop, the following move is always the reverse of the first move, and the target is the low of the first move in this case, or the high of the first move in other case, which is in the down move first. So right here we see the market structure shape, right? It make a high low, 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 high low. Let's see. But hold on. But we look at this move up, we see this is the shape right there. So basically we make a low right here and then another low to confirm it. Okay. And it retests this one. So we still have this order block still valid. So if we go long, it's still valid, right? If you look at the long setup, but let's see, it take out liquidity here or not. But let's see if retest it bearish breaker right here. Okay, what is the close? 52.61, 4, 52.61. Yeah, it did retest this bullet bearish breaker, and it's going down. It's going down. Let's see. So this bullish bearish breaker is still valid. Bearish breaker Fibonacci gaps is still valid right there. And we saw this order block still bearish. It's a range here. Let's see how it's gonna break out of this. Right, we are in this range right now. Let's see. So we take a very good trade here, and this one, you see that we put 5 cents above this. Can you imagine that? And it's boom, just 1 cent above. Yeah, this is 66, this is 67. So 5 cents is a good rule of thumb right there. But if you anticipate a little bit more volatile, then you increase more. But this is supposed to be low risk. You put your risk very low. 5 cents above your stop loss is at 5 cents above right there. So you risk very little. Let's see, I think it go up to this level. So it still tests this bearish breaker. So we see the buy sell liquidity were trap right here. It's the equal low, right? 16, 15. Okay. So this one is lower than 1 cent lower. It's 1 cent higher. So you have a sell liquidity were trap right there. Let's see. It's saved for later. Or you can treat this also a order block. You see a huge order block and boom, it move away from that order block. So you have a bullish setup still start playing right now. So if you short right here, right, because this is the setup, you put your stop loss above here 5 cents, you got stop out now. By now. So it's a huge red candle and now it's cut back. That's amazing. You see, that's what I told, that it made just a temporary, it just retracement. Here, but we capitalize that on a small time frame and we get out. That's a smart thing to do. That's the easy trade right there. It's the own way of retracement. And we will capture that. So right here. So it pump into the supply zone or area right there, basically a bearish. No, on 4 hour time frame it not 4 hour, on the daily that is the fair value gap, the gap that it needs to review or revisit right there. Okay, look at something that I know yesterday. Let's look at the daily. You see right here, that's the fair value gap right there, the gap that I believe it going and basic retest that gap. right here. Look, and real-time chart right there. Okay, yep. And today is September 1st. We say goodbye to August. Yep. So we're still in Q3, right? Yeah, it's Friday. Look at that. It's retesting up. But whether it's gonna close this gap, that's the question we have. I mean, right here we don't see there's a gap right there. I mean, you can treat this as an auto block, but it's global purpose. You can treat this as an auto block right there. I mean, it's this giant candle moving down. Yeah, someone sell right here. August 27. I mean September. Sorry, I mean July 27. What days of the week is that? That's Thursday. Wow, people sell real hard Thursday. They don't want to go on Friday. They want to be on Thursday. They get out and they take a long weekend, make a buttload of money to dump it at the top right there. It's exactly at the top. They sell at the top. These people are so smart. Yep. Let's see what else I see. Yeah, right here. It's basically, yeah, I think I did tell this already on the weekly chart. You see the source setup right here, auto block, and the favorite gap right here, and this is a retest. So the source setup is still valid. It may come down, and at the same time we have a long setup right here, auto block, favorite gap, go up, and right here is to make a low. Is this the market structure shift or just a retracement? In order market shift, I would love to see it make another low, and we know that is market structure shift, and then the manipulation is gonna be the move that make manipulation right here, and we're going and short them. That's the manipulation, and then we can measure the standard deviation from that manipulation move. So this bearish breaker is still valid. You see that the whole right here is still valid. And you see the short setup right here, auto block, value gap, retest. So if you want, you can short again right here. It's very low risk right there. How much you read? How much you risk for this one? 21 cents, just 5 cents above here. And how much you gain? I think it will take the sell side liquidity if it goes down. Okay. Yeah, we said this a good risk reward ratio right there. But do we see any long setup here? We don't see any long setup here. Look at that. Okay, go and check the short trade right now. See how it's play out. Remember, with very low risk right here. You have auto block, value gap, retest. And the short app we took is auto block, value gap, and also is play into the bearish breaker also. Yeah, also plus. Auto block. Not auto block. Bearish breaker. Value gap. Retest. And this is a short setup. And yeah, we do have a buy side liquidity. Chicken. Plus we have sell side liquidity were trap, and entry is about right. 10.22. Yeah, our target is price swing low right there. Okay, let's see how it's playing now. Our stop loss 5 cents above this guy. Wow, we are really good now. We got it now, my friend. See that? We only risk 5 cents of that. And look at the risk and reward ratio. So if we want, we can move to the stop loss to break even now. If we want to be safe, right? If we want, because we already make a good profit on the first trade, so this one is a bonus for us. Move over here a little bit. Okay. And let's see if we can realize our target. Let's see if we can make our target and we go in at 10:22, right? That way. Yeah, 10:22. That's what entry time right there. It's like a 1-7 risk reward ratio right there. 1-7 risk reward ratio. That's very low risk and high reward right there. Oh, I see. So right here, but you still have the bullet right here play now. Follow up, and then get the retest up here. You see the bullets still playing. So our conservative target is right here. It reached. Like I said, you can move the stop up to break even now. So you don't have basically it dropped the buy side and it checked the sell side. So let's see if it's gonna yeah, right there, you see that? Okay, we good. So if we move to break even right here, we still in the trade, right? We move break even because we go in here, so we move right here, break even, we still in the trade. And this is an order block, huge. It retested a block, so the long step still play. It may go and check out this buy cycle that boom start going down. So there could be another scenario right there. Well, so I think if we move the break even around here, we get hit. Yeah, we stop out right there. If we move. And the second scenario is that if we don't move, then what can happen? Let's take a screenshot of this. So if we move plus stop out to break even, we got stop out. Let's keep working. So if stop loss move to break even, it got stop at 10:29. Wow, you see that? We should not move, just stay there. think we entry right here 22. I think it may go into consolidation a little bit before it make another, low resistance move or clean move. Low resistance liquidity run. Yeah, but if you look at the 5-minute time frame, you should stay in the trade because it's very bearish setup right there. You see that? The breaker right here, the bearish breaker, huge fatal gap displacement, and it just retest that. Bearish breaker. So you stay in the short, don't move your stop loss. The 20 cent. Come on, you did make the profits. $1 something, right? So you just keep it 20 cent more, get back 20 cent. So why you have to already move your stop loss? Leave it there. This move up is just another manipulation move in order to pair the sell side right there, and it did. Ooh, look at that. Look at this stop loss. So the bullish signal, the bullish setup still play now. All right, I think we approach the time 10:35. So take a look at the DR model before we wrap up this trading section, the first hour. In the future, I may do 1 hour, not necessarily in the first hour, maybe in the second hour or any hour of the trading day, because there's some change in my schedule. So right now I do the first hour, but maybe in the future I will do any hour. So that's a heads up right there. So you see that right here, the DR low, and right here the DR high, and then you have implied DR imply the low, imply high, and there's the mid trend. So right now it's still around here, so it can go either way. It can go down, so this will become a high of the day or the high of the week for that matter. Oh, you know what? You remember the power of 3? The power of 3 is what? Not the power of 3, but open, high, close, open, high, low, and close. And we use that on a Friday because we know after I make the high of the week, it will retracement in order to do the close. Oh, then look at the weekly candle. Wow, we have to put that into our brain. You see, it make a high and then it's close below the high. That's how the weekly candle form right there. Ooh, I see. So whenever we trade on Friday, always keep that in mind. Okay. Friday is open, high, low, close for weekly. Candle. So basically we put this in our note right there. So for Friday we need to use the open, high, low, open, high, low, and close play for weekly candle. So we know that makes a lot of sense right there. So that means the retracement right here after I make the high will be a very sure high properly set up. In the first 5 minutes, go and short them, and boom, grab the money and run. That's the easy trade like that because it's after I make a high, it will do the close below the high right there. All right, I think we're over time today. Talk to you later. Thank you. Bye for now.